Good morning. Today is Monday, August 15th, 2011. Welcome to Forex and 4. This morning, it looks like the markets have sort of settled in a little bit after just the intense volatility we had last week. Markets look to be trading a little bit higher to start the day. That's stocks are higher in Europe, U.S., and also in Asia. Now, Asia took the cues from the U.S. stocks last Friday, which were higher. All right, and there was actually some decent news overnight out of Japan that their GDP figures came in and they declined less than expected. Now, I know it sounds like sort of a minor victory here, but it's actually pretty important. Reason being is that they were expecting GDP figures to decline 2.5% in Japan. They actually declined 1.3%, but it shows that economic activity is starting to pick up over there, and a lot of it's due to the rebuilding efforts that have happened and have been occurring after the tsunami and the earthquake. So, we often talk about these times with natural disasters, while in the short term can be a bad thing for economies, and actually in the long term they can be beneficial. So that's a good sign out of Japan. But you can see here that dollar yen is still sort of flirting around this 76, 77 level here, and you can see that we're just sitting up above the daily pivot. Now we know about the lows here at 76.25 for all time, and you can see that that's exactly where this S2 support is. Now, we've been hearing about Japan. They're wrangling about the intervention, and their finance minister was just out overnight saying that he's prepared to take bold action if he needs to try and stem the flow of money moving towards the yen and yen strengthening further. So, a lot of what's going on here is it's twofold, but it's dollar weakness because we know about the economy here in the U.S. and we know that Bernanke said last week that he's going to keep rates extremely low until the middle of 2013, I think. All right, and then we also know about the problems in the Eurozone with the debt crisis. So let's just take a look at the euro here real quick. You can see here euro, and let's look at euro USD. All right, same sort of deal. We're just sort of flirting around these middle ranges right now. Now, in the Eurozone, there's a meeting tomorrow between, I guess we'll call it a Franco-Prussian meeting here between Merkel and Sarkozy, where they're going to try and get together and see what they can come up with to try and, slow the euro debt crisis. And a lot of what the market's been calling for is for the creation of some euro bonds, meaning a unified bond that they can issue that every country's involved in. And right now Germany's obviously resistant to that because they know that if some of these countries start bailing on the eurozone, that they're going to be left holding the tab. So that's not actually happening just yet, but they're saying that they need to have some discussions about it. So a little bit later this week, tomorrow we're going to get German GDP, which is going to be a big number, okay, and then we're going to get Eurozone GDP as well. That's going to show us how the economy's doing there, and we can just come out here and look on just a little bit longer term time frame. Let's look at the 2-hour chart. All right, and you can see that we've sort of been in this range up to 144 highs, say 141 lows. We're sort of smack dab in the middle of it. So I anticipate we're going to trade this range until we get more clarity in the Eurozone about what's happening as far as a solution to the debt crisis. I just want to show you the Aussie here. That's not the Aussie, that's the CAD. Let's look at the Aussie here real quick. Now in Australia, they're going to have a release of the meeting minutes tomorrow. It's going to come out for the RBA's rate policy meeting, and there's some expectation in the market that perhaps the next move for Australia could actually be a rate reduction and not a rate hike. So we're going to have to keep an eye on this and see what's happening, but you can see that we're sort of setting up here. It looks like we've got maybe 105 area of resistance, and then perhaps a retest of some of these support levels a little bit lower. So we could see that happening. This has got the setup for potentially looks like maybe like a little bit of a bear pennant there. So we're going to have to see how that pattern completes. But perhaps if we look at it on the 4-hour chart, it's going to look a little bit better. So right now, I would say that this R3 resistance at 105.5 is probably going to be pretty good resistance up there. Just want to show you Euro Swissy. Man, what a move on this thing. Now, Switzerland, we know about, they've been trying to weaken the franc, and one of the things they mentioned was that last week they said they may peg it to the euro. This week they're saying that they may set target levels that they're going to try and maintain, which means that they're going to do whatever it takes to get to that level. Well, last week we picked off the bull pennant here that happened, and you can see, man, we got a bounce. And I think my target level was right at about 111. It was just a short-term trade, and sure enough, this thing just rocketed right through and up to 114 and change up there. So sitting right at about 115 right now, which is probably going to act as a little bit of resistance. Okay, and you can see that we've got this area right here, say 114.35, which was a previous area of support, which could now be resistance. We're going to have to see what happens with Switzerland. All right, just want to show you the pound. The pound has been quiet lately. We haven't been saying much about that except for what's been going on as far as the riots go. But in the UK, they actually had home prices plummet. They were down about 2%, which is, I guess, a good thing if you're talking about inflation issues that they have. But overall, you don't want to see home prices falling because that reduces confidence. So it was down 2.1% for last month. Now they're going to release their GDP, or excuse me, their retail price index tomorrow is coming out, and CPI is coming out tomorrow. And then on Wednesday, they're going to have the Bank of England minutes, and they're going to have the unemployment rate as well. So Tuesday and Wednesday could be big days for the pound, and we'll see what they say out of the meeting minutes. I mean, there's some talk that they may have to go on some further quantitative easing to support a declining economy there. So we're going to keep an eye on the pound. But if things start to settle in the Eurozone, then perhaps we'll see a little bit of pound weakness here. I'm guessing 164.75, 165 is going to act as an area of resistance for some time. So that's really what we're seeing right now. We've got in the U.S. A little bit later this week, we have our CPI data coming out. I think it's on Thursday. And we're going to see where inflation is there. We're expecting 3.3%, but we know the commodity prices have sold off recently. I just don't know if that's going to show up in the reading. So we're going to have to keep an eye on it. But right now, the big news is going to be out of Europe and what they're doing over there, and whether or not that induces a flight to safety, more risk, or if people are going to be a little bit more confident moving forward. So that's what we're looking at today, folks. Good trading to all.